Most traders don't lose because of their strategy. They lose because they cannot survive at least 5 minutes while trading gold. This is why I dedicated this entire video to give you guys a full breakdown on how to actually trade gold consistently using a small time frame like the 1 minute to the 5 minute time frame. If you are a beginner, an intermediate trader, or an advanced trader that's still having problems trading gold, or just want something new and fresh, this is the video to watch. I'm going to make sure I give you all the details that you need so you can be consistent, profitable, and scalable when it comes to scaling and growing your account. Let's get to it. Now, we've been trading gold for some time and many other assets like oil, 30, NASDAQ, and our community is doing very well. That's why I'm telling you now, if you want interest inside of our community, which I would love to get you in our community to help you more, there's 2 ways to do that. But first, I just want to show you some of the results that some of these students have been doing. As you see currently, we have students eating from US 30 trades. We have students eating from GU gold. So we have a lot of traders that mainly trade gold. As you see, a bunch of these are gold. And then we also have more here that's gold as well. If you really do want to get access to our community, there's 2 ways that I'm allowing you to get in for free. One way is if you are a prop firm trader and you want to actually scale and grow an account, I'm going to allow you to do that by signing up with Think Capital. I will put the link down below with my discount code. Your very first challenge is going to be 30% off, and then moving forth, you get 25% by using the code SOLO30, which gives you 30% off on all challenges for the first time. And then moving forth, if you're looking to reactivate your account again, you can just put it in solo, and that will also give you the 25% for all remaining challenges. So this is something exclusive that I'm going to be doing for you guys. Once you purchase any of these, you want to go ahead and email our team at joinsolonetwork@gmail.com. Personally, for me, I trade a broker because I know I can risk way more. And this is why I'm also giving you guys an opportunity. If you want to sign up with Gates FX, at least deposit $250 into the account, you're able to get in our community for absolutely free as well. Other than that, like I said, this is only for my beginner traders or traders that is looking to scale and really grow and also want a mentor to really help them. Now let's talk about gold and talk about the efficiency of how to really scale an account. Most traders don't realize that most traders blow their account because of this reason here, where you will see a beautiful engulfing candle and you're like, let me go ahead and sell this because we got an engulfing candle. We were already going down. We created a low. We broke past my 9 EMA, which I will explain that in a bit. And then we see another move right here. We got an engulfing candle here, and then you just get these big spikes and these big spikes. Well, I teach a lot on how to avoid that and mitigate that out so you don't have to worry about catching these fake outs that gold tends to do. So that's the thing. Gold moves fast. It gives hope, then wipes traders clean. This is pretty much why 1 month you will make $40,000 and then the next month you will lose $80,000. And it's just like, what is going on? That is why you need to know when and where to strike, because that's where it prints. So let's talk about session timing. The best times to be trading and scalping. First one is going to be London Open. This is going to be 3 a.m. to 5 a.m. Eastern time. And then why this is important is the first liquidity sweeps wicks from the Asian sessions highs/lows. The second time to trade, which is actually the one that I'm pretty much getting up, is going to be 7 a.m. to 9:20 a.m. Eastern time. Fake out zones. This is where you build the range before the volatility really kicks in. Now, this is the time to really be trading it if you are a New York trader. 8:30 to 10 a.m. is where the money window, volatility, the volume spikes in the consistent direction it happens. So as a trader, these different time frames that you're seeing, London Open, New York pre-markets, and New York Open core, are very important for you to actually scale and grow an account, because one of these 3 can give you the best setups. Is it important to trade all 3? Yes, but now you understand why you should be trading it for that particular time zone. And that being said, pick one of these 3 for your trading plan to help grow this account. Try to stick with 1, not 3. Me personally, I'll go with New York Open Core and stick with that and scale your account just from trading only at that time. So now, as far as the market setup framework, the first step is we need to identify the Asian session high and the Asian session lows. This is where we want to have the potential liquidity targets. So as you see in this photo here, we have the Asian session high and the Asian session low, which is known as the Tokyo session. This is pretty much where you want to draw your lines to figure out if the market is going to either sweep the highs or then sweep the lows. But remember, this goes right back to your time sessions. You're not trading during Tokyo. you're not trading during London, or you might be, or you might only be trading during New York pre-markets, or you might be trading only during New York open. You need to make sure that aligns with all of this, meaning if the liquidity sweeps happen during London, perfect, you still don't take the trade. If it happens during New York core, perfect, you can take your trade. So now the second step is wait for liquidity sweeps during the London or New York open. So I gave you guys 3 different windows, but it's within the London or it's within New York, because you got New York pre-market, New York open, and you got London. So notice that this yellow box is London. That's why you see London here. And we've pretty much just been sweeping the entire Tokyo sessions highs. So that being said, we're now going to be waiting for the setup, and that's going to lead us to step 3. This is where we now either do 2 things. We mark our fib levels looking for the 44 to the 618. This is going to be our golden level of where we're looking for the pullback. So if the market is going down, coming from an upwards move, once we get that break of structure, this is where we want to see it tap into before we determine that we want to go ahead and sell this. And then we look for that. And it needs to happen within this bracket of this zone fib play. That's one way. The second way is wait for price to break the previous lows before selling. So that being said, we need to make sure price is breaking lows before you consider making a fair trade. Now remember, time matter. Notice here we had our high, we broke the low. As you see, it pulled back. This is guaranteed within the 618 to the 44% mark, as you see, but instantly it went up. Why? Because once again, time sessions matter. You need to either be trading at one particular time, not all particular times, because this strategy is very time sensitive. Now, after that, the confirmation to enter in this is going to be confirm your POI, supply demand plus imbalance. That is what I was saying earlier when going to step 3. You're going to be looking for these 2 levels, which is the 44% and the 618. Within that, you're going to see a POI level. This can be anything from supply or demand or even an imbalance. This is what I call a POI zone. We instantly seen market broke the low with this line here. And then we also had a break of structure here. The moment we broke this low, we decided to pull back into a POI level that was drawn from a Fibonacci from this swing high to this swing low. The reason why it is important to make sure you draw out your fibs to this swing high and a swing low is to find the valid POI zone so you can actually take that trade. Because the problem is you might see a support line here, a resistance line there, a supply and demand chain here, another supply demand chain here, and you don't know which one is going to be valid, and it throws you off, and it just adds an emotional roller coaster to your whole system. The goal here is to minimize as much and keep your charts as clean as possible to give you the highest probability setups. And within that, this is why we use the Fibonacci to help us determine the most accurate and valid zone levels. So that is exactly why this is the most important zone level here. You then enter only when you see gold comes into this area. It's going to basically sweep some of that in this zone, and then it's going to pull down. Within that, you're going to be looking for a 9 EMA crossing before or after with an engulfing candle. And that is exactly what you're seeing here. So that is how you enter in the market when you're trading gold. But remember, it's all about your times, and you need to make sure that is the key factor to your plan. Let's talk about how far we should be taking this account to, meaning like what is my exit model, because that is very important. You can't just be trading it all the time to 1 to 20 or 1 to 10. You got to know when to get out. Let's talk about it. For a quick scalp, 20 plus pips is all you need for target 1. Target 2, you just let it run to wherever that is at, but we're going to just focus on a quick scalp, and that's why target 2 does not exist. The stop loss, you want to put it 10 pips behind the entry wick. So if this was the wick here and this was your entry candle, 10 pips above that, and then your entry is there. And then the idea risk to reward is what you want is a 1 to 2. So here's what I mean. If the candle was a very small engulfing candle with a wick, and we had 10 pips here, entry here, but then our 20 pip move was here, and this is giving us at least a 1 to 2, we trade it. If it's giving us lower, like a 1 to 1 or not even a 1 to 1, you do not take this trade. That is one thing you have to understand when trading in quick scalp with gold. Now here's the mindset: in and out before volatility shifts, best for New York open burst. If you are a trader that is looking to trade this during the New York opening time, this is going to be the target you should be going for when dealing with this exit model. Now let's talk about the next one, intraday scalp. This is going to be 30 pips partial close. And then you're going to be looking for target 2. You can ride it to 60 plus pips. Now, as far as the stop loss, just because this is going to be a longer play, you can expect a 15 pip stop loss, and that's what you're going to be looking for. And then your go-to is going to be 1 to 2 as well as a 1 to 3. Now, the notes and the mindset for this is take half, let half run. Focus on consistency, not the size. Meaning, once market hits TP1, take partials. If you get in 2 setups, take 1 trade out in TP1, let the other trade ride to TP2. This is literally what we do with oil consistently, and this is why we're so profitable. And this is why my account was at 45K in profits last month, because we decided to do this exact model right here. So if you are a trader that is looking for something to consistently grow your account, this is it. All right, now let's talk about for all of my swing traders or traders that's looking to hold for multiple sessions. 40 pips is what you need to lock in profits for target 1. And then for target 2, 80 to 100 is your max extension. You want to have a 20 pip stop at your entry candle, and then you want to at least go still for a 1 to 2 and a 1 to 4 max. There's no reason to go anything more. I honestly maximize at 1 to 3 all the time, and I don't need anything else. Even if I see the market is going to 1 to 5, guess what? I just get out the trade, take my profits, and re-enter in the trade to hopefully ride the additional 1 to 3 that's maxing at 1 to 10. So this is good for people that's looking to close before 10:15 a.m. Eastern time. After that, the volume dies. All right. But if you are a trader that is looking to hold the trade out longer because it just didn't hit your take profit, this is going to be your exit model here. So let me remind you of how the strategy works when trading gold. First is you want to look for your liquidity first, which is the sweep / the entry. The second, timing. Without that, you won't understand anything. Exit model that I just shown you requires different structure off of your timing. So you want to make sure you understand your timing. Your timing equals setups and your sessions. And then 3, remember, patience pays. You don't need to be scaling your account every second of the day, knowing that, oh, I need a 1 to 4 or 1 to 8 or 1 to 4 or 1 to 8. Consistency wins. 2 perfect setups is all you need, not 10 random trades. And then last but not least, emotional control. No revenge trading after any spikes. This is why I gave you my exit model. This is why I gave you the strategy breakdown, and why I told you it is very important to make sure you understand your sessions, your timing, and your entry model, and all the above to make it all one piece. And that is exactly why I created this trading plan here. So, by the way, if you guys are interested in getting this for free, plus all of my other guys that I have that I created within years of trading, you can go to soloetv.com and sign up for the email list. And then within the email list, when you go to the top part, you will see 10K free plan. Get that. I will have shit ton of different plans for you guys to download and also more. But that being said, if you guys ever want me to help you with anything more in depth, you can always tune into tradewithsolo.com or get into our one-on-one mentorship. That is all available in the link in the description down below. Once again, I appreciate you for tuning in. Your boy Solo checking out. Peace.